Hi there everyone, my name's Kevin. I'm a Forex trader. I've been trading since 2015, trading Forex and trading my own fund. I had a number of offers of trading funds for different people and different companies, but I've always avoided it. I've just stuck with my own fund, and that's the way that I trade. I trade price action as a day trader, and I can go more into detail with that now, as we go through. But I've got the chat screen open as well. If anyone's got any questions at all, if anyone wants to ask any questions about my trading, about their trading, any questions you've got about problems you might be having, or of course, if you're new to trading, how you can get started, what you need to do, and yeah, feel free to ask away. So what I'll do, I'll just go straight over to the charts now, and that way I can start talking through the kind of approach that I have to trading whenever I sit down in front of the charts. So first thing that I'll always do is take a look at the Forex calendar. I need to know as a trader if there's any red news events coming out during the time that I'm trading. And the reason for that is if there's any red news events, they could have a serious effect on the markets, which could cause me problems, or it could work in my favor. But it's just best to actually, let me just do this. Okay, so this is the Forex calendar that I use. And as I sit down to trade, the first thing that I'll do is take a look at this and see if there's any red news events. Now, I usually trade I always trade the London session. And so this morning, before London opens at 8 a.m. London time. 7 a.m. there was this pound news coming out, this GBP news. And so I actually sat down and traded this at 7 a.m. And the markets moved briefly, but they moved, and I managed to get in and out of the markets today I was probably finished in less than 5 minutes with a nice tidy profit. And that's the way it goes. Sometimes you'll sit in front of the charts, you might be there for some time. Other times you'll get in and out very, very quickly. Of course, that's as a day trader. I'm a day trader, by the way, so I'll get in and out of the markets and be flat the market before I actually before the end of the day, before the session ends. As a longer term trader, trend following, that kind of thing, they'll be sticking with the markets for a lot longer. They'll have open positions for a lot longer. Anyway, let's get over to the charts and I'll show you, after I've checked this out, the next thing I'll do is take a look at the charts. Now, I trade 10 pairs, sometimes 11 pairs. This US dollar, Swiss franc at the end here. I'll look at this sometimes if the markets are a little bit slow. But coming into the markets, all I'm doing is looking at this grey box and these little numbers up here and this EU8 up here. I'll explain that in a moment. But what will happen is if you're new to trading, you'll open up a trading account with the broker. They'll give you account number and password, and that you'll apply to one of these trading platforms. This is MT4, by the way. So if I open up a new chart, this is what it will look like when you first open it. And you can customize this to whatever you want. This here is a 1 hour chart. It's just the basics, how it is. And really very, very easy to customize these charts. You can go straight into, let me see, it's just going to change this over. So we're looking at bar candles or bar charts at the moment. I work with candlesticks, which are these. And if I just bring this up a little bit, if I zoom in a little bit, these bars here, these are called candlesticks. Each one of these, this is on an hour's time frame. Each one of these candles represents 1 hour in time in the markets. What I'll do, I don't like working with these. It gives me a headache looking at these colors. And so what I do, I've customized my charts to the way that I like them to look, which is like this. Much kinder on the eyes, much easier to work with, very, very subtle. And I just find it so much easier to work with this. 1 second, I just need to take a look at the chat. Okay. So as I say, each of these bars, these are called candlesticks. And you can see sort of why, when you look at something like this, it looks like a candlestick body with a little wick sticking out the top. But with these, you get wicks at the bottom and wicks at the top. And what that's about is, if I zoom in on this, okay. What these wicks are about, either side, the actual body of the candle, this part here, the actual solid part, this here is this is a downward movement candle. These blue candles mean that the price has come down. So the price started out here, it moved down, and it came down as far as this. However, it finished down here, but it did spike a little bit. So what these wicks are, show you again, these wicks here, that's where price has spiked. It's come up there and it's come back down again, and then come down here. It's spiked down, but actually closed at this point here. So that's what a candlestick is briefly. Let's just get back over to the other charts. So the 10 pairs that I trade as a Forex trader, I trade the Euro US dollar, Euro Japanese yen, Pound US dollar, Pound Japanese yen, Australian dollar, Australian yen, US dollar Japanese yen, US dollar Canadian dollar, Canadian dollar Japanese yen, New Zealand dollar US dollar, and like I say, sometimes the US dollar Swiss franc. Now this is fairly open. However you want to trade, whichever pairs you want to trade, it's absolutely fine, no problem at all. And you'll get moves across the board. The reason that I choose these 10 is simply because the spreads are the lowest on these 10. And the way that I trade as a Forex price action day trader, I work with very, very tight stops, which means I can show you on this because it's just a demo account. So if I get into a position, let me just, okay, market's moving down on this. You can see this has been coming down. This box, by the way, is something that I use myself. This is the Asian session. This determines where the Asian session is. And it's this that I use as an indication as to what the market's doing. So on this, you can see the market's come down. The price has come down. So we've got what I call a clear directional move to the downside. I'll be looking for further downside moves. Now, just as an example, I'm not going to go through the exact strategy that I trade at the moment. It is a bit too in-depth to do in a live stream like this. But what I will do is I'll give you a rough idea. So price is pulling back at the moment, and let's say that I want to take this short. Okay, I'll sell that, and I've just taken that short at that level there. Up here you can see you've got EU, Euro, US dollar. This is just an instant recognition thing for me. As soon as I'm flicking through the charts, I know exactly what pair I'm looking at. Okay, so I've just sold this, and I'm looking now from that level there for price to come down. One thing I will mention at this point, whenever you're trading Forex, there are no guarantees, absolutely no guarantees. And if anyone tells you that they're looking at this chart and they know exactly what this price is going to do, run a mile, stay away from them. The moment I take that trade, I don't know. It could do one of three things. It could do what I want it to do. It could move down. Price could also move up. Or throughout the session, you could just see price going sideways. And it's just something you have to accept. You can't, in a small move like this, you can't really make money. You need the move to the upside or the move to the downside, and you need to be on the right side of that trade. So if anyone tells you that they know what the markets are going to do, they're giving you indicators, or they're giving you any information at all telling you this is a dead cert, forget it. There's no dead certs in this. We work with probabilities and very, very tight risk management. Working with tight risk management and with a good strategy and probabilities is all you need. So with this, I work with tight stops, like I say. This is an 8 pip stop on the Euro US dollar. So what I'll do now is I'll just pull a stop loss in place. Let me just pull this out. That's 6, 7, that's 8 pips there. Okay, the stop loss is essential. And all I did there was where I'd taken this position, where I got into this position short, all I did was drag that line up. That gave me my stop loss. So what happens now? If this price continues to pull back, if it hits that stop loss, I'll get knocked out of this trade, losing 8 pips. It's as simple as that. You do get some traders who will not work with stop losses. And for me, it's suicidal. It's madness. Because you imagine if that price stop isn't there and you're determined that you're right and price is going to continue down and you're going to make a profit. Like I say, no one knows. And this price could continue moving up, and it could actually wipe your account out, which is why I'll always state how important stop losses are. So stop losses in place, ready just in case that price moves back up. But what I'm looking for is this price to move down in my favor and for me to take a profit. So what I'll also do is I'll set a take profit level. So I'm going to move this down, and the way that I trade, I'll work with key levels. So this is 80, 0.980. Forget that last figure there. That's just tenths of an amount. So we'll just ignore that. 80 is the key level that I'm aiming for. And I'm looking now for this price to move down towards that level there and hopefully hit that level. We'll let that run for a little while I'm talking about a few other things. We'll see how it goes. Okay, so that's one position I'm in. Now, I mentioned just now about the stop loss. Stop loss, as I say, is so important. There's 3 elements to trading Forex, 3 essential elements. The first is the strategy. I can sit here and I can talk to you about candlesticks, charts, how it works, how to place an order, how to take a position, and everything else. But you need a strategy. I've got a strategy that I've been working with successfully since 2015. I was taught it by a very, very successful trader, a lady trader out in California. And I paid for that education back, like I say, back in 2015. And I actually worked with her now. It got to a point where I was doing okay, and she asked me to join her. So I actually work with her now, teaching trading. So the strategy is the first element of trading. There's thousands and thousands of strategies that are successful. I'm not saying that the strategy that I use is the be-all and end-all. There's so many different strategies that you can apply to the different methods of trading. Now, once you get a strategy, a tried and tested strategy. Oh, one other thing that I'll mention, by the way, if you're new to trading and you're looking for a strategy, I'd recommend that you go for a strategy that the coach or the mentor is actually trading themselves, and they prove to you that they're trading it themselves. It's all very well for someone to sit back and take your money for an education, and they're not trading that system themselves. They're not putting their own money on the line. You need to find a mentor or someone to teach you who's actually trading the system themselves. And Kim was doing that, the lady that I work with, and I do it as well. Every day I'm out on Twitter. Every position that I take is on Twitter. And if I was on Twitter now, if this was a live account, I would be posting this and a screenshot immediately on Twitter showing that that's a position that I've taken. Okay. So the strategy, first element, but the strategy, believe it or not, is only a very, very small part of the equation, very small. The next element is risk management. And that's what I'm talking about when I was telling you about this stop loss. That's my risk. Okay, so how do I work out what my risk is? My strategy says if I take a position on the euro US dollar, I need to set a stop loss of 8 pips. And you'll see, if we flick through some of these, euro Japanese yen, it's 10 pips. Pound US dollar is 10 pips. Pound Japanese yen is 12 pips. Okay, now this is, don't worry too much about that at the moment. It's my strategy, the way that I work, and it all depends on the spread of each individual pair. But getting back to the euro US dollar, just to keep it simple, we know that the stop loss on this is 8. How do you work out how much of your capital, how much you're actually putting at risk? And like I say, this is part of the risk management. It's all very well having an 8 pip stop in there, but the actual position size, the amount that you're actually risking when you take a position, is all part of the risk management as well. You need to make sure that you're not risking too much of your account. Most traders, most Forex traders, like working like me, I'm not talking about the corporate traders, the big boys, the Merrill Lynches and everyone else. I'm talking about traders like me, just trading my own fund. We'll usually work with a maximum of 1% of our capital, meaning if this moves back and stops us out, we only lose 1% of our capital. How do you determine that? How do you work out Just imagine if you're working with $1,000 capital. Well, let's up it a bit. Let's say $10,000. And the other thing is with Forex, the great thing is you can start very small. You can start off with something like $500 and then gradually build your way up. You don't need to be a wealthy person and risk a load of money, put a load of money on the line to get started. You can start very, very small. But if you've got a $500 account or if you've got a $10,000 account, how do you work out the lot size when you take a position? And if I right click again, I'll show you what I mean. So right click, sell limit 1.39. That's the size of trade that I'm taking, 1.39 lots. And I'll explain that as we go through. So right now I'm risking approximately 0.5% of my capital. Right, let's get over to this other window here. And this will help you. This will help you in determining your position size calculator. And it's been designed by a company called babypips.com. Really good. It's a free resource. You can go on here, type in babypips.com, position size calculator. And this is how easy it is. So account currency, I'm working with US dollar. You can change that to whatever you want, whichever currency you're working with, but I'm working with US dollar. Okay. So you can put in here, let's clear these off. I've just been working with it. Okay, account balance, you put in there. If you're working with $500, you type in 500. You're working with $10,000, let's put that in. $10,000 is my account size, I'm saying, for this example. $10,000 there. Risk percentage, like I say, the maximum that you should risk as a trader working with your own fund is 1%. So you can put 1 in there. In fact, I actually work with 0.5%. I work with 0.5%. So what I'll do for ease, I'll just put it in as 1%. And stop loss, we're working with the euro US dollar. These are all the different pairs here. We're working out the euro US dollar. My stop loss on the euro US dollar is 8 pips. Okay, I'll go calculate and it will give me the figures here. So standard lots, 1.25. That's the largest amount that I can put a position on the euro US dollar if I only want to risk 1% of my $10,000 account. And it's as simple as that. To work out the trading lot size, you use this baby pips tool, and you can go through all the pairs you trade, all of these here, working out how much you can risk on each trade. And that is what I'm talking about when I'm saying about risk management. And it is absolutely, absolutely essential. Correct risk management is something that every trader needs to work with. So I'm just trying. Okay, so working with this, I know if it stops out, I'm going to lose 1% in theory of my account. Now, what you really need to try and do is work with a risk of 2 to 1, minimum 2 to 1, which means if you're risking $10, you should try and win back $20 minimum. Okay, so if you're risking 8 pips, you should try and win back 16 pips. What have I got on this? Let me just check. I've got 19 pips there. So that's within the boundaries of my risk. Okay, and I'm also targeting this 80 level. These key levels that I work with are very, very important in Forex trading. But like I say, I'll explain that another time, or if someone wants to learn the strategy that I work with, you can ask me about that on my email. But so if it loses, I lose 8 pips. If it wins, I win 19 pips. Okay, so that's the risk management. Okay, so you've got the strategy, which are the rules that you apply to your trading. You've got the risk management, which is how you manage your risk, how you manage your money, and you keep it all in check. The one thing that can throw both of those out of sync is mindset. It's the way your mind works. It's the way that human emotions work. And mindset, the third element, is the most difficult. The most difficult part of trading is the psychology and what goes on inside your head when you're trading. Okay, me as a new trader, I'm looking at this. I've just taken a sell position on this euro US dollar, looking for it to come down to my take profit down here. And of course, as a new trader, I'd be looking at this and I'd be feeling great, fantastic. I'm winning money. Second, I just think I've just had a message pop up. Let me just check this. Sorry, I'm just checking the live stream window. I'll keep you a moment. Okay, so I just had a message sent through there. So yeah, as a new trader, I'd be looking at this. This would be so exciting for me because the fact that I've taken a trade and it's not coming back to my stop loss and I'm winning money right at this moment, I'm in profit and it's about halfway to where my target is. I'd be ecstatic. I'd be euphoric. I'd think I've got it made, even though I'm a new trader. I'd be thinking, I understand this. I've got it. I'm going to make money. I'm going to get wealthy off of this Forex trading. That's one side of it. What do you think I would be feeling as a new trader if I'd have taken this position and this candle had started moving like this and it had closed and the next candle had opened up and it had started moving back? Oh, by the way, I'm working with 15-minute candles. I work only with 15-minute candles. That's the only time frame that I use. Okay, next 15-minute candle and it's doing this and it's getting close to my stop. How do you think I'd be feeling? You type in if you want. How would you be feeling if you were a brand new trader? This is happening. How would you be feeling with the way this trade's taking place at the moment? How would you be feeling if it was coming back against you? You'd be feeling pretty bad. You'd be feeling really bad, believe me. And that is that pull of the psychological element. That psychological element can get you to break the rules. That's your stop, and you have to stick rigidly with it. Whatever the rules say, you have to stick with them. If you see price starting to do this and it's coming towards your stop loss, the temptation is so strong to do this and move your stop loss even further, which means that you're risking a lot more of your account than you should be. You should never do that. You've got to stick with your rules. And let me just move this back. If a trade goes against you, it's something you have to accept. In fact, there's a saying that I use, and it says that you'll never win until you learn to lose. And it's so true. You've got to learn to lose as a Forex trader before you can start winning. And the idea is that your losses are less than your wins, and you'll end up coming out on top overall. I'm not saying each individual trade. I'm talking about the overall event when you look at the bigger picture, maybe a week's trading, a month's trading, 6 months trading. You stick with your strategy. If it's a good strategy, if your risk management's good and your psychological approach is spot on, it's solid, you'll do okay. You start breaking the rules, you start bending the rules even, and you'll blow up an account. Believe me, I did. Before I met Kim, before I was working with this lady from California, I blew up 2 accounts and I lost quite a bit of money. And my psychological approach just wasn't very good. And that can be down to your background, the way you've been brought up. And I've got a perfect example of that psychological thing. For me, growing up in Southeast London and my background, it was very difficult for me to accept these rules and accept that I was going to lose. Losing was it was just unacceptable to me. To accept a loss, there was no way that I was going to accept that, which is why I blew up 2 accounts. My partner, she's from Thailand. Soon after we got together, she was watching me trade and she said, teach me how to do it. She's from Thailand. She comes from a Buddhist background. She's got a very, very calm mindset. She's very calm and methodical the way she thinks. I told her the rules and she had no problem at all. Any positions that she took and she got stopped out, she just accepted it and then got ready for the next entry level, the next position. And I couldn't believe how calm she was. And you know, she became a successful, profitable trader in less than half the time it took me to do it. All she was doing was working on the strategy to understand that fully. The mindset part for her was no problem at all. Me, I had the strategy down, but because my psychological approach was all over the place and I was a bit fiery, it took me a lot longer to become profitable as a trader. So psychology is absolutely, absolutely essential. And what I'll do, I'll just show you one thing that really turned things around for me. Let me just Oh, sorry, I've just seen the comments come up here. Nendi, hi. Hello, everybody, says Nendi. Gary Spence, hi, Kev. I'm in Manchester. Nice of you to join us, Gary. Thank you so much. Andreas, hey, Drac, how you doing? Hi to you too. Thanks for joining us, Drac. And Josh says, hi, Kevin. Great, I'm getting your messages coming through now. I don't know what happened there. Okay, so anyone's got any questions at all, fire them through on the comments and I'll see what I can do to help you out. Okay, going back to what I was saying about the mindset thing, me being a bit fiery, the one thing that turned it around for me is that I purchased an audio book and then I actually bought the book itself, the written book. And this is the book, Trading in the Zone. This book, I'm not sure what year it was, but it was a long, long time ago. Sadly, the guy who wrote it, he died at quite a young age, Mark Douglas. The man was an absolute genius, a fantastic trader, but his approach to the psychological element is unquestionably the best there is. And this book is what turned me around. I bought this book. You'll find it on Amazon or wherever you buy your books from. You can get an audio book as well, which is what I did. And so when I was driving, I was listening to it and it became almost like the whole lot almost became like a mantra. Everything that I was spotting in the markets, I would refer back to this and I would apply what Mark taught me in this book. And it was that leveled out my my psychological element and helped me become successful at trading. So I would highly recommend this book to anyone. There's nothing in it for me. I'm not linked with these people at all. I'm not giving you an affiliate link or anything like that. Go out and find this book if you want to seriously become a successful trader, because the psychological element can be learnt from this. It worked for me and it's worked for so many other traders that I know. So, I've just taken profit now. I don't know if you saw that, but this candle here has just come down and it's just taken profit. So that was a winning trade and it gave me 19 pips. And all I was risking there was 8 pips. Okay, so using my strategy, looking at the markets when I came in, this was the move I was looking at. And I was looking at the probability. I didn't know it was going to do this. No way could I have known. But the probability is what I'm working with and the correct risk management. I took a position short and you can see it's just come down. It's just taken profit. So I've earned, well, I haven't earned well on that because this is a demo account. I wouldn't dream of trading a live account while I'm doing something like this. It's too risky. So if I was trading live, that's exactly what I would have done. And that is a winning trade there that you've seen before you as we're going through. Let me just have a quick look at these comments, see if anything's coming in. Okay, let's have a look. Yeah, going to continue through till 6 o'clock Thai time. Let's have a look. Yeah, of course, any questions? Anyone's got any questions at all about what I've spoken about? If you're already trading, if you've got any questions about how you can get into the basics, if you're brand new to this, you can ask those questions here. Just type them in and I'll happily answer them for you. Let me tell you, I've just been talking about the psychological element, okay? I've just taken profit on this around about this level here. So as a new trader, you'll be looking at this now and you're ecstatic. You've made money. You've actually made money. But hang on a minute. You've taken that position off there and you've taken profit. But what's it doing now? It's continuing down. Damn, you could have made more money. As it moves down, that's going to beat you up. That's going to be like someone slapping you around the head and torturing you because it's what they call leaving money on the table. Something else you have to get used to. There are methods of taking advantage of this. You can move that stop loss I was telling you about. You can move that down as the trade moves, locking in profit as you go down and let it run for as long as it's going to run. Personally, I work with key levels. Look at this going now. So there's a lot more money that could have been made there. And as a new trader, that can really wind you up. That can really make you angry, extremely angry. And it's something, again, that you have to get used to with that psychological element. Okay, so this 15-minute candle is just closed. We've just got a new 15-minute candle opened. It's 17:30 here in Thailand. And the new candle's open. Like I say, I'm on 15-minute candles. Up here, this is where you can change the time. Let's change over. This is 1-minute candles. So every minute you get a new candle. 5 minutes, 15 minutes that I work with. There's the 30-minute candles. And let's just go right up the scale. This is 1 day. Each one of these candles is 1 day. And each one of these lines is 1 month. 1 week, you can see. And 1 month. Each of these candles is 1 month. And these lines here mark out the years. Each one of these segments is 1 year. But like I say, the way I trade, I keep it as simple as possible. I work with bare charts. I don't use any kind of indicators. I'll tell you what, if we're going to do another live stream at some point, I'll start to talk about indicators and show you how you can apply them to the charts as well. Because different methods of trading will use different ways. I work purely with price action. I work with purely whatever this price is doing and what I can see happening. Some use indicators, but we'll get into that another time if we're going to do another live stream at some point. Right, so that's the psychological element dealt with. Let's have a look over here. Something else that's very, very important is monitoring your trading performance. You can learn a lot from it. Let me show you this. Every successful trader works with a journal. This is my journal. Again, I keep things very simple. Some people use online tools, they use online apps to mark in their positions, what they've taken, and you know, they'll put everything down on an online app. But for me, it's simpler just to use these spreadsheets that are made up in Excel, print them off, and I just pen them in as I go. So I write the date in, the session, whether I'm trading London or New York. I always work at the beginning of the open of a session. So as London Stock Exchange opens, I'll start trading because there's usually more volatility then, more price movement. Or I'll start when New York session opens, the New York Stock Exchange opens, again, because of the volatility. News today is where I write in if there's any red news events that I need to look out for. Duration is afterwards. I write down roughly how long I've spent in front of the charts. Okay. Meditation is something else I do. Meditation helps me a lot with trading, and it's very simple. Again, 15 minutes, nothing too complex. I just sit and calm my mind down before I trade. And that's for me to tick it to say whether I've meditated or not. And then I can determine whether no meditation or some meditation has made a difference to my performance. And believe me, it does. So looking down here, these are all the pairs that I trade, as I've just listed out before. I took a position just now that was on the euro US dollar. So what I would do immediately if I was trading live with my money is I'd mark on here. First of all, I'll go through the charts and I'll mark on here if it's in a clear directional move up, a clear directional move down. Let's flick over to that a minute. So this here is a clear directional move down for me. This clear directional move down, and again, all of these are clear directional moves down. Okay, this one isn't. This is what I call a range. Meaning that price, okay, it started off down here, clear directional move down. Since then, however, price has come up and it's taken out an awful lot of this Asian session price move. And so I'll call this a range. And I'll mark this up as such. I'll trade it as a range, and I've got a set criteria, a set method to get into this position. Okay, clear directional moves, I'm looking for pullbacks. So on the euro US dollar, you saw this candle pull back higher than this candle. That's the pullback I'm looking for. I got in to the downside. Okay, so what I would do, going back to the journal, what I'll do, I'll mark on here, clear directional move down, clear directional move down, range, whatever it is, I'll mark it on here. And at a quick glance on my journal, I know exactly what I need to see on the charts before I risk any money on it. Okay, so I took the euro US dollar short to the downside. Here, I'd write in S at whatever the level was. So if I got in at, let me see, where did I get in? Let me just quickly have a look at this. So I got in around about this level here, around about 0.98192. I don't write the whole lot in. I just write 19. And I took it down. To, let me bring this down and show you. I brought it down to the 80 level. Down here, okay? So I'd mark that on my journal where I got in. Oops, let me just bring this back across. So I'd mark on there, let's bring that down a bit. I'd mark on here the level that I got in at, and then I'd mark the result. Full stop if it took a full stop, take profit if it hit my take profit, or PO if I punch out of it for any reason. If it just wasn't moving, if time's getting late and the markets are very slow. But this journal, at the end of the day, I'll look at it. I'll know whether I've won or lost. Oh, and also at the bottom, I've got this pip count. So it shows me I can write in how many positive pips I've got, winners, how many losers I've got, and notes. You know, I might write in there feeling a bit rough, feeling tired. And that can also give you an idea as to why you might have a winning or a losing day. Notes are very important. Again, this is all working on the psychological element, which is the biggest, and I can't emphasize it enough, is the biggest and most important part of trading. Okay, let's have a look. We've got some comments here. Josh says, what strategies do you use to evaluate risk? Okay, I'm working purely with very, very tight stops, Josh. And I work with, okay, my strategy is price action day trading. And I'm working with a woman called Kim Krompus out in California. She's been working with the same strategy. And you can check it. You can go back on Twitter all of the time she's been trading it, and you can see her success. Since 2015, and you can, my Twitter account is at UK to Asia, and that's a number 2, not AT, at UK to Asia. I'll put that up at the end as it goes. You can look at my Twitter account and you can see since 2015, every single position that I've taken, I've done a screenshot and I've typed in the details. So the actual strategy works. Working with that type risk, I'm risking 1%, half a percent. That's how much I'll risk. If, however, I have a period where the markets are not running that well, you know, I might have a bad period. I might have something going on here in business that we got here in Thailand that might be distracting me and causing me loss after loss after loss. And what I'll do at that point is I'll cut my risk back to 0.25%, and I'll trade with a 0.25% until I clear my head, until I get back to being consistently profitable, and then I'll put it back up to 0.5%. And that's how I work it. I'm working with a minimum of a 2-to-1 risk to reward ratio. It just works out. It works absolutely fine. So that's the way that we work out our risk. Mandy says, hi Kev, how about gold analysis today? First of all, I don't trade gold at all. Everyone calls me I'm not the only one. A lot of people call me the laziest trader they know. And let me tell you why. I'll finish off with this first. Okay, so notes. This journal is essential. You should keep a journal, and it is essential to be able to assess what you're doing and how you're performing. And it really will make a difference to your trading. Okay, so gold. They call me the laziest trader they know. And I'm talking about, I've got friends who work at Merrill Lynch in London. I've got lots and lots of day traders who work from home with their own accounts. And for me, it doesn't really fascinate me, the markets, meaning that I'll come to the markets, I'll sit down at usually about 7:15 in the morning, have a look at the charts. I'm talking about London time, by the way. 7:15 in the morning, I do a live webinar to teach some traders that I work with. That starts at 7:30 in the morning, and I'm finished, ready for the 8 o'clock open at the stock exchange. So before that, I don't even think about trading. I don't read newspapers. I don't look at any kind of financial news at all. I don't look at any news at all, really, to be honest with you. Media just doesn't interest me in the slightest. So coming back to being the laziest trader, I do nothing about trading until I actually sit down in front of my screens and I'm going to be teaching and I'm going to be ready to trade my account. I trade. I'll finish as quickly as I can, and I don't force it. If I can get in and out of the markets quickly, today I'll manage to make 56 pips. Great. That's a fantastic winning day. When you're working with 0.5%, that's a fantastic winning day. So I was in and out of the markets before I even did the live webinar teaching the traders. Okay. So, and that's it. When I close my charts down, I'm done. I close them down and I'll have a quick assessment of my journal and then I'm finished. And I don't think about trading again until the next day when I sit down again. Some people analyze, they pull it apart, they do this, they test that, they do back testing. It's not for me. It's just something that really doesn't interest me. Trading for me is a means to an end. It's a way of making money. And that's what I do. I get in, I get out, make my money or lose for the day, because you will lose sometimes. And I'm done, finished. And then I can go off out on my bike in the sun. I can go take a look at the business interests we got here, go to the beach, or do what I want. But yeah, and for me, I don't analyze at all. I most certainly wouldn't be analyzing gold. Absolutely not. I don't do any analysis at all. I'll sit down in front of these charts and immediately I'll say, right, what's the euro US dollar doing? It's in a downtrend. Okay, I'm looking for a pullback. I need this price to pull back to here. I can take it short. And it's as simple as that. I know immediately what my risk is. I put in 8 pips. I know what the lot size is because I've worked that out on a weekly basis, and I keep it as simple as possible. And you see my charts, they're bare, nothing on them at all. So sorry, I can't give you any advice on gold. Absolutely not. There are analysts out there you can speak with, but I don't know. I'm not sure about anyone's predictions. You know, it's just like looking at a crystal ball to me. Josh says, what was the riskiest trading decision that you can share to us? The riskiest trading decision? The riskiest trading decision was when I first started and I blew up those 2 accounts. I used to do stupid things. I used to take a position short. How are we doing for time? Okay, we're all right. Okay, let me tell you. I'd take a position short, okay? This is before I become disciplined and I became profitable. Market's moving down, right? I'm working with a strategy whereby I'm going to take this short and I want it to continue this downside move. And I'd put that would be my position where I've taken the trade. This would be my stop loss. And my take profit, I wouldn't even put one in. I'd be looking for this to move right down off the chart there and make a bundle. And that's how you think sometimes. And then prices start doing this. And I'm thinking, no, it's not meant to do that. No, that's not what I want. And this, I would just scrap it. I would scrap that stop loss. And then I'd see price coming up and up and up. That's the riskiest thing that I ever did, taking off a stop loss and breaking the rules. And if you do that, you're going to end up blowing an account, without a doubt. If you can, let me tell you this as well. Pook, my partner, when I taught her, started with a small account, she has never blown up an account. And I don't sit looking over her shoulder all the time. She trades her account the way she trades it. And she has done well, extremely well, because she got the mindset right. Stuck with the rules, did as she was told. Mindset's right. She's got a good strategy, working with the strategy that I use. And she was profitable in no time at all. So the riskiest thing, that was it. Someone told me, do you remember when Brexit was announced, whether we were leaving on, I say we, I don't even feel part of Britain anymore. Whether Britain was going to be leaving the EU, Brexit day. People told me to stay well away from the charts on that day. But I didn't. And I was at that point, I was profitable, I was a disciplined trader. But I thought, I'm going to have a look at this and see how it plays out. Now, today, I made, like I say, 59 pips. And that is a very good profit for a morning's trading. For me, it was like 5-10 minutes trading. The day of Brexit announcement, I turned on the TV, which I rarely did, to watch the news, but I wanted to know what was happening. And of course, Britain were pulling out of the euro. The pound was dropping, massively dropping down. And the MPs were on TV, all giving their opinions, what was going to happen. And there was one MP who, outside Parliament, said, well, we're just rushing in now, and we're going to work extremely hard today to bring this under control and try and bring the value of the pound back up again. And I just had to laugh. It was nonsense. But a lot of people listened to it, and I turned over to my charts and I saw the pound starting to come back. It was pulling back. It wasn't anything to do with what the MPs were doing. He hadn't even got into the chamber. It was to do with what market traders were doing, making money. They'd seen the big drop. They'd seen that they could get in and buy the pound at a very, very low value and watch it go up again. And I did the same. I took 2 positions, one on the pound US dollar, one on the pound Japanese yen. And I ended up making, it was 2,700 pips between the 2 of them. And like I say, today was 59 pips, and that was very good morning's work. 2,700 pips in one morning, trading the pound US dollar and the pound Japanese yen. And that was on the pullback. So let me show you. Take this for instance. Okay, we're looking, Brexit's been announced, the pound plummeted. This is 90 pips this here. This move here is 90 pips. It plummeted hundreds and hundreds of pips, thousands of pips. It moved down. But then suddenly we started to see it move up, and it was moving up big. And I got in on this using our strategy, and I played it and I watched it go up and up and up. And it was because of that I made my biggest trading day ever. And I don't suppose I'll ever see a day like that again. So that could have been risky because people said, well, it's going to be too volatile, don't trade it. But I saw an opportunity and I took it. I was still working with tight risk. If I'd have taken a stop, it would have been a very small stop. So that's about it. That's about as risky as it gets now. There's no risk anymore for me. Okay, there's an 8 pip stop or a 10 pip stop in this instance, and that loses me money. But it's not risk. It's risk, sure, but it's risk well managed, and that's what you've got to do. You've got to manage risk. We've been struggling in means of inflation, says Josh. What do you think or suggest is it good to invest or trade at this moment? Well, let me tell you this, Josh. Just recently, I'll say just recently, for some months now, a few years ago, after Brexit, once it all calmed down, you see this move here. This box represents the Asian session, this box here, okay? Overnight, that's moved 90 pips. Not long after Brexit, we were seeing the Asian session doing this. And it was like 15 pips, 10 pips. And every day we were coming to the markets and it was these little tight ranges. Average daily ranges were very, very small. And then we get to the point where London started, which is around about this point here. Hang on, let me clear this off. Then we get to the point where London Stock Exchange was opening, which is around about here. And we were seeing the same. The markets were doing this. They were coming down, moving up, coming down. And it was all tight moves like this. Now, when you've got markets like that, it is very, very difficult to make money. Now, and for a good few months now, I'd say probably 4 months, we've been seeing this. And in fact, let me just, US dollar Japanese yen. Let me give you an example here. US dollar Japanese yen. And what I'll do, I'll take this off so I can scroll back. Okay, look at this. See this move here? That would have been quite more. It could have been difficult to trade, but that one candle on the US dollar Japanese yen, 115 pips, one candle. A bit of news slipped out about the Japanese yen, and that gave that kind of move. Let's carry on back and back. Okay, here. Asia wasn't doing much. Coming into London, we had a move of 146 pips. These are the kind of average day. Oh, by the way, these blue lines, they show you the average daily range each day. So this day here is marked up here. So the average daily range there, 176 pips. And we're seeing these kind of moves more often. That was a bit smaller. Here, average daily range on this one, 124 pips. And we're seeing this regular. So Forex market now, right now, and Kim mentioned this in her weekly newsletter that she puts out on Sundays. Right now, the Forex markets is a very, very good time to get involved. Very good time. I'm not saying everyone's going to be a winner. You've got to have the strategy. You've got to have the risk management. And you as a person must be in control of your emotions and your psychological approach. And if you can do that, right now, the markets are giving so many opportunities. So I'd say Forex trading right now. That would be an amazing way to make extra money. You can make money on the side. You can have a full-time job. And so I'm just checking. I just heard a little bleep and I'm not sure if that was for me or not. Yeah, you can have a part-time, you can have a full-time job and trade part-time using different methods. For me, the way I trade, I need to be in front of the charts either on the London Open at 8 in the morning or 2 o'clock in the afternoon, 2:30 in the afternoon for the New York Open. That's my method of trading. But there's many different methods. There's short videos that I've put out for the brokers to put out there and inform people about the different methods that you can apply. And you know, you can fit it in with your lifestyle, with your working. So take, for instance, a trend trader who might be trading longer term. They can have a full-time job. They can look at the charts for 5 minutes once a day and then leave it until the following day. Go to work, do whatever they're doing, and still make money from the markets if they're working with a good strategy. So I know things are really bad. I hear from my friends back in the UK and I feel so sad for them that things are so tough at the moment. But there are opportunities out there. Forex trading is one of those opportunities. It's not something where people are going to throw money at you. It's difficult in the sense that human emotion is difficult to deal with. Knowing yourself and working with your capabilities. And, I can say to you now, can you follow rules? You'll say, of course I can. When it comes to risking money, your hard-earned money, that's where the psychological element can go out the window. If you can control that and accept the losses, as I said earlier, you'll be absolutely fine. And just, here's another example. You can all try this. Get a coin. Or get 5 coins, because one coin might be weighted a little bit different. So, it might keep coming up heads instead of tails or something. Get 5 coins. Flip those coins in rotation 100 times. Mark on a piece of paper, heads, tails, 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 heads, however it comes up each time. And then you apply risk to that, the risk to reward ratio. So every time it comes up heads, imagine you're winning $2. Every time it comes up tails, imagine you're losing $1. That's just a 2-to-1 risk to reward that you've seen me trade on the euro US dollar today. You have got more than a 60% chance of winning if you constantly put $2 on heads coming up and you're risking $1 on tails coming up. You've got more than a 60% chance of winning, and you know that flipping a coin, there's a 50-50 chance. So your risk management in flipping a coin will guarantee that you win all the time, over a period of trades, over a period of flips, over a period of time. Any more questions, anyone? Because we're getting very, very close to having to finish off. Very, very close to finishing off. Let's have a look. Let's have a look. I'll keep you a moment. I'm just checking some messages that are coming in. Okay. Right, okay. All of you should know, a second. All of you should know that attending this, you can be part of a competition. And you've been told towards the end of this webinar that we'll be giving out a secret word. You need that secret code word to be a part of that competition. What you need to do, let's have a look. Okay, it's a lucky draw. 2 attendees who are on this webinar now, who private message. You have to send a private message to TISFX Telegram group, the admin. And you just give them that secret word and you're in with a chance of winning $50 on an account that you open up with them. So that secret word is gold. We were talking about gold just now. So secret word is gold. And if you send that across on Telegram, let me just check. I've just got a message coming through, making sure that that's right. Okay, Telegram group. Let me see if I can put this in. I'm sure that someone on the back end, someone in the office there will be able to put that Telegram group out to you. And they'll give you a link to that. And can someone type it in the comments now, please, so everyone can see it. And then that way you can send that code word, that secret phrase across gold, and you could be in with a chance of winning $50 when you open an account with them. Any other questions? If not, I can't really. I mean, there's so much more I'd love to sit and talk to you about, but I can't do everything in the one session. I'll tell you what I will do, though. I'll just put this up on the screen. If anyone's interested in learning more about my method of trading, my strategy, send me an email. My email address is uktoasia.com@gmail.com. shoot me an email, uktoasia.com@gmail.com. And I can help you out a little bit more there, not so much really with the theory and everything else like I've done here. You'd need to attend these live events that we do here to get more instruction like that. But if anyone's interested in finding out about the method that I trade or the membership that I work with, and I even do one-on-one personal tuition as well, send me an email and I'll give you all the details on there. That's the easiest way to deal with that. Has anyone got any more questions? Let's have a look. Okay, so the admins are saying we'll do another teacher event in the near future. Stay tuned. Yeah, keep looking out for the notifications coming out. It's been an absolute pleasure getting to speak with some new people and sharing a little bit of my experience and my knowledge of Forex trading. And it's well worth it, believe me. If you can get it, it's really worth it. It gives you so much freedom. Once you start scaling up and you start trading bigger amounts, and it is a gradual process. It's not something you're going to get into and within weeks you're going to be earning thousands and thousands of dollars each week. It's a gradual process, and it's a very strong learning process as well. But good luck, everyone. And thanks very much for attending. I'm going to close the room down now as I've got nothing else to tell you about. Any more questions? One more chance for any questions before I close out of here. If not, no, nothing coming in. Okay, thanks very much, everyone. And I'm going to close out of here now. And I look forward to seeing you again soon in the near future. Thank you.